Ladies and gentlemen, good day and welcome to the Q4 and FY22 results conference call of Shri, Keshav Cements and Infra Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vasupal Shah from Kirin Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I would like to welcome Mr. Venkatesh Katwa, Chairman of Shri Keshav Cements and Infra Limited, Mr. Vilas Katwa, Managing Director of the company, and Mr. Deepak Katwa, Executive Director and CFO of the company. So, to the note, this is the first conference call held by the company. First of all, the company will give the introduction about the company and its business, then the brief discussion about the Q4 FY22 results, and then we will be having a Q&A session. Mr. Venkatesh, over to you, sir.
Thank you, Vasupalji. Hare Krishna to everyone and good afternoon to all. I hope you all find today in a very good health. I welcome you all to the first conference call of Shri Keshav Cement for the Q4 FY22 results. To begin with the introduction, the company was incorporated in 1993 by purchasing a cement 20 TPD plant in 1994. Company is engaged in the manufacturing of cement and the solar power generation. The capacity of the plant was increased from 20 tons per day gradually to 600 tons per day and ultimately to 1100 tons per day as of March 2018. So with two cement manufacturing plants, one with vertical shaft technology and another one with the rotary kiln technology. So currently cement capacity put together by both the plants is 1100 tons, which equals to 3.63 lakh tons per annum. As mentioned, we are primarily focused on manufacturing of cement and generation of solar power. Cement plants are located at Bagalkot district in Karnataka, and the solar power plant is also located in Koppal district in Karnataka, and these two locations are about 200 kilometers apart. For the cement plant, the company manufactures 43 grade and 52 grade ordinary Portland cement. The company sells the cement brands under Jyoti Cement and Keshav Cement with brand name as Jyoti Gold and Keshav Cement. Jyoti Gold Cement is used for construction of road, bridges and infrastructure projects. And Jyoti Power Cement is mainly used for domestic and residential construction. And Keshav Cement, we have maintained it as a premium brand sold across Karnataka and South Maharashtra. The cement industry is highly energy intensive and with power and fuel costs constituting to about 30% of the manufacturing cost in the cement manufacturing process. Due to this high cost inputs, we understood that setting up a solar plant and utilizing it captively would help the company to prune the cost drastically. So in 2018, the company established and commissioned initially 22 megawatt solar plant, which was later increased to 25 megawatt. And by December 2021, company established another 12 megawatt solar plant. So as of now, the complete capacity addition is about 37 megawatt peak at both the plants located at Koppal in Karnataka. Both the power plants are evacuated at 110 kV voltage level. This helps us almost with zero downtime. And the investment is done in such a manner that the evacuation capacity of the existing infrastructure can take up to 100 megawatt of solar power generation. Somehow we are here to describe about the strengths of our company, the management, the promoters, have a very strong experience in the cement manufacturing process. We have a locational advantage of manufacturing facility because there are no significant major plants located around us. Since cement comes with a high logistic cost, the nearby markets can be served with our plant compared to a lot of major plants which have to come from over 300 kilometers away. Due to a strong marketing and sales process, we have improved our brand presence in the target market of North Karnataka, South Maharashtra, and Goa. I cannot say with certainty, but I think we would be the only cement plant in India to run 100% on green power. With 37 megawatt peak capacity, we are consuming about 12 to 14 megawatt, and the rest has been sold to the various industries. In FY22, our cement plant utilization was around 65%, and with the rising demand from infrastructure and residential development, we are planning to expand our. We are working on a feasibility to expand our cement capacities. I'm happy to announce that the company has first time crossed rupees 100 crore revenue milestone, and that will certainly keep us driving in the future too. To give you an industry perspective, India is the second largest producer of cement in the world. It accounts for more than 7% of global installed capacity, with a huge potential for the development in infrastructure and construction sector. Because of this, the cement sector is going to derive a lot of benefits from. Some of the latest initiatives of the government, like 98 smart cities, it will provide a major boost to the sector. In fact, the plant where we are located, there are at least 5 smart cities in the vicinity within 100 to 150 kilometer radius. As per ICRA, in FY22, the cement production in India is expected to increase by 12% year on year, driven by rural housing demand and government's strong focus on infrastructure development. As per present ratings, the Indian cement industry is likely to add another 80 million tons by FY24. It would be the highest since 10 years. Also, the government is looking for a higher allocation for infrastructure of approximately about $27 billion in roads and about $19 billion in railway infrastructure as per budget of FY23. This is again likely to boost the demand of cement. The company is very positive for the sector outlook and will continue to focus on expanding production capacities and strategically reaching the market and gaining leadership position in the Tier 3 market. We are equally focused on environment and will support our plant and state requirements from our in-house production. Today, like I said earlier, we could be the only plant running on 100% renewable energy. Now I will give a financial performance for FY22 and we'll also speak a little bit about fourth quarter FY22. As mentioned earlier, again, this is the first time we have crossed the 100 crore milestone, and we believe that this is going to be a great growth initiation from the company. Simple highlights would be the revenues increased by over 44% year on year to about 116.09 crores versus 80.75 crores in the previous year. EBITDA was 37.66 crores versus 26.56 crores, up by 42% compared to the previous year. Net profit was 9.1 crore versus the loss of 8.44 crores in the previous year. EBITDA margin and PAT margin stood at 32.44% and 7.84% respectively. Operating cash flow stood at about rupees 24.27 crores. Return on equity and return on ROC stood at 41.95% and 11.18%. Cement business contributed to around 90.6 crores in sales and solar contributed to 15 crores. There was a huge jump in the solar generation is because we added a new solar plant of 12 megawatt capacity. Just segment-wise, last year solar sale was around 8 crore 30 lakhs. This year it's 15 crores, and this 15 crores is taking into account the new 12 megawatt power plant which was commissioned at the end of quarter 3. So we would be expecting the revenues to show up going forward. Cement volume also grew by about 34% to 2,26,959 metric ton, which is about 63% of the capacity utilization. And solar generation also increased by around 22% to or 45.454 megawatt hours. During this financial year FY22, the company successfully established a 12 megawatt plant with a term loan of 40 crores and the rest coming from the promoter's contribution. The project was about 58 crores, and we have commissioned it successfully on the date as required by the compliance authorities. Now the key highlights for the Q4 FY22. The revenues were at 36.81 crores versus 25.84 crores compared to the previous quarter of the previous year, year on year. EBITDA is 11.32 crores compared to 9.2 crores, which is up by 22% compared to previous quarter. The net profit is 3.87 crores for the quarter versus loss of 75 lakhs in the previous year-on-year quarter. EBITDA and PAT margins also stood at 30.75 and 10.51% respectively. So cement business contributed about 12.78 crores and solar business contributed was 5.80 crores. So in all, these are the simple highlights. The production in general compared to last year and this year, or last 3 years, there has been a continuous increase in production as well as in sales due to new marketing and sales initiatives by our marketing department. Recently, we have been beginning to supply with some major infrastructure projects like irrigation and roads, and we hope this will continue to add demand to our product and give a positive result going forward. So I thank you all for listening to me attentively. I would like to open the floor for any question and answers anyone might have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Apurva Mehta, individual investor. Please go ahead.
Yeah, hello, good news. My question is, what is the total debt on the books as of now, and what is the average cost of borrowing?
Okay, so the total outside liabilities apart from the promoters' unsecured loans, which are subordinate to the main loan, is about 173 crores. And the average interest cost for the last year is 10.25%. But in February 2022, our banker, which is our sole banker, the entire loan is only from one bank, which is Canara Bank. They have reduced the interest rate by 100 basis points. And in next couple of weeks, we are expected to get, we are hoping to get an improved credit rating and expect the interest to go down further. Thank you, Atulji.
Yeah. Any plan to reduce the borrowing in near future?
Typically, yes. I mean, like other than a constant discipline of repayment, and when there is excess cash flow, cutting down the debt is always on the books, always on the plan. But as of now, at least for next 2-3 years, there is no direct plan to cut down the debt, other than from internal accruals and the generation of cash flows.
Okay. And any capex plan going forward?
Company is, as a board, we want to again further modernize the cement plant. We feel that the existing cement plant, we could add some additional grinding capacity, which will eventually, give a higher top line and bottom line too. But as of now, we are in the stage of feasibility studies, and giving an exact nature of investment or this thing might be a little difficult, but it is still, it will be on a very positive note once we get the feasibility study completed in the next couple of months. But yes, we are looking for some capex this year too.
Okay, yeah. Thank you.
Thank you. The next question is from the line of Sachin Shetty, individual investor. Please go ahead.
Yeah. Hi, sir. Good afternoon. This is Sachin Shetty. Yeah. Our long-term debt is, just now you told that our long-term debt is 173 CR. Okay. And total solar power plant capacity is 37 megawatt and cement plant capacity is 110. So, yeah. This 173 CR, I think in presentation 200 CR something is mentioned. So how much repayment we have done this last 2 years?
In last 2 years, we would have done the repayment of around 34 to 35 crores. But last year, we took a debt of 40 crores plus 20 crores as a GECL loan, which is why you have seen an upward tick for the last year.
Okay.
But and most of the loan is for the solar plant. I think most of that total outside liabilities is coming for solar plant of around 150 crores. Approximately 20 crore debt you can distribute to cement. What happened was we would be buying power at 8 rupees per unit. After putting a solar plant, the power cost came down to less than 3 rupees. So we saved a huge amount in the power cost, and to some extent of it, we are utilizing those funds to service the debt and repay the solar loan.
Okay. And this solar power plant, this is consumption of power cost is 30%. So out of 37 megawatt, how much capital power consumption in terms of megawatt?
So last year with almost 63% capacity utilization, we consumed about 15 megawatt of solar power, and the rest 25 megawatt we sold out at 22 megawatt.
Okay. If you are selling 22 megawatt to the customers, at what price you are selling, sir?
My last year average was 6.35, and this year we have begun with almost 6.8 rupees. 6.2 or 6.3 was the last year average of the solar price.
Okay, for unit, we are so 22 megawatt we are selling to the government. Means a different consumer.
Selling to the government, what is happening is Karnataka government had an incentive scheme, whereas if you set up the plant before March 2018, it had some benefits like zero billing and banking charges, zero transmission losses. These account to almost 7 to 8 crore rupees as a cost. So these we completely saved for the next 10 years. So till March 2028, we are not going to incur any of these costs. This was only specifically given only up to March 2018, for which we have commission. So when we sell the power from this particular plant, there are no transmission charges, there are no wheeling charges, there are no in-kind or in-cash charges applied by the government. So which is why we decided to set up in fact, we had only 25 megawatt earlier. We decided to add 12 megawatt so that 12 megawatt can be utilized captively and 25 megawatt power can be sold outside. So our average price, like I answered, is about 6.3 last year.
So reason behind setting up this power plant is only to power self-consumption and also that to take advantages of incentive, production linked incentive schemes of solar, right, no, sir?
Yes. In fact, 25 megawatt for captive consumption only. So because of the benefits, we will sell the power outside and set up a new plant for captive consumption. I'm sorry, go ahead.
So this benefits we will get in terms of revenue or what, sir, exactly? At the end of the 5 years or so, how much incentive or we will get the benefit? I just try to understand.
Sure. The first 22 megawatt power plant, what we did was, the benefit was EBITDA, because most of the power was utilized internally. 14 to 15 megawatt is used internally. Hardly 8 to 9 megawatt was being sold. But now this new 12 megawatt is entirely for revenue purpose, which is we will be able to see that in FY23.
Okay. Understood. Sir, my question is, what is the impact of our EBITDA for this rising fuel price and coke price going forward, particularly for cement plant?
Yes. So company consistently about 70 to 80% of the fuel used by the company in FY22 was coal and not coke. Actually, coke is the fuel where cost of calories per kilocalorie is lesser compared to coal. But in quarter 4 or beginning of April, we carried out a certain modification in the machinery by which we can use 100% petcoke now, compared to we use about 80% coal and only 20% petcoke. The cost difference between petcoke and coal is almost 30 to 40%. So this year we will be able to see utilization of petcoke. However, your question was pertaining to the increase in prices. We feel it has reached its peak, and we expect, as already mentioned in a lot of media, we're expecting correction in the cost of fuel too. So once it goes down, things should be stabilized. But as of now, of course, because of the increase in price, it does put pressure on the EBITDA margins.
Okay, sir. Sir, in your presentations, you have mentioned that we are doubling the capacity of cement plant. So if
Yes.
so, what plans you have? Any plans you have planned for this year, or what is it? The capacity will be go for next year?
Yes. So as of now, we are like in the middle of a feasibility with FLS company. Basically, what we are trying to achieve is, I'll give you an understanding math. We produce about 800 tons of clinker. Typically, as per Bureau of Indian Standards, we could add up to 1600 tons of slag and make it 2400 tons of cement capacity. That is what is achievable in this plant with, of course, certain investment. So now what we are planning to do is we are wanting to add a slag grinding mill. So once we add slag grinding mill, we will be able to add that to the clinker what we are producing and eventually look for doubling of the capacity. We hope, based on what we see and the projections given us by the EPC contractor, we should be able to, we are looking forward in most likely to complete it in this financial year. But we could provide more clarity maybe in the next quarter once the feasibility study is complete.
Okay, and means you mean to say only the clinker we have to increase the capacity. And what was the approximate cost for the clinker, sir? Approximate?
Cost of production of clinker?
Yes, sir.
It varies it varies so badly. It is so much connected to the coal prices. But at today's coal prices, it is about maybe 3,600 or so. This was about 6 months back. It was less than 2,500.
Okay.
But I wouldn't know the exact figure. I can find out and find out an average figure or a quarterly figure and probably mail it down to you.
Okay, sir. Okay, sir. Thank you. And just continue, sir, our Concall investors in quarterly basis.
Thank you.
So that we can interact with you in such a good manner. And consider for the NSE listing also, sir. Thank you. Thank you so much, sir.
Yes, thank you. We will.
Thank you. Participants, if you have any questions, please enter star and 1 on your touchtone telephone. The next question is from the line of Avinash Gorakshakar from Profit Mart Securities Private Limited. Please go ahead.
Yeah. Good afternoon, Mr. Katwa. I mean, good set of numbers. I have just one question to ask. Now, we have seen a very major cement acquisition happening in the industry. Polsim stage has been sold to the Adanis. So, in your perspective, how is the cement industry going to flourish in the next, say, 2 to 3 years? Do you see some more consolidation happening in the sector, which will help better pricing power for cement companies, especially for a company like you, which is operating in a very niche area? So, first of all, what is the outlook on cement prices, and overall, what is the kind of outlook, if one were to look at the cement sector in the next, say, 2 to 3 years? How does the management look at this sector? If you can give some color on this.
Sure, Avinash. Thank you for the question. it is my personal opinion, large amount of consolidation has already happened. So what are already remaining are pretty much the big players. It's just my personal opinion that another set of consolidation may not have happened in immediate future. One thing I can tell you, India as such, the per capita consumption is at one of the lowest levels. When the world average is hovering around 550 kgs per capita, we are around less than 200. And we are not very doing great even compared to the SAARC nations either. So typically what I see is there is going to be a huge capacity addition in the next few years. I would say in about 18 million ton is expected in this financial year itself. With this next 4 to 5 years, with the elections coming in and government's promise to front load the infrastructure, there is going to be a huge growth, and we are already seeing that. And typically, cement plant gestation period to add a new plant is almost 6 to 8 years, and we don't see a significant amount of additions, maybe 2-3 years down the line, at least from the perspective what we look at. So I feel the existing cement plants will continue to grow, and the cement sector appears to be in a very positive direction. Thank you, Avinash.
Yeah, I have got one other question which I wanted to ask you, that in terms of the coal price hike, coal is a very important input. Is there been any raw material pressure for the company? I mean, how is the company placed on the raw material side? Any kind of increase in cost of raw material, or the company has managed to get raw material at adequately competitive prices? If you can, share that input also.
Sure. See, coal price, typically coal is imported for cement. Most of the cement plants would work on imported coal. And the petroleum coke we are sourcing from Mangalore Refineries and Petrochemicals Limited. Because of our small size, we are getting the fuel very adequately. And the other raw materials like limestone, they are available in plenty. So I don't see any issue as of now, based on the current situation, having any challenge regarding acquiring or getting the fuel or the other raw material.
Okay, sir, Mr. Katwa, thank you very much.
Yeah, thank you, Avinash.
Thank you. Ladies and gentlemen, if you wish to ask a question at this time, you may press star and 1 on your touchtone telephone. We'll take our next question from the line of Yashwanti Kedkar, an individual investor. Please go ahead.
Yeah, good afternoon, sir, and congratulations for the landmark year.
Thank you, madam.
Okay. I just wanted to understand, we are seeing the EBITDA margin of 30%, which has been seen for the Q4 and as well as, for the full year. We are also seeing the scenario where the raw material prices and other prices are using, where you are already putting an effort to use, the green energy and all. But my question is, in this scenario, would the company be able to maintain this EBITDA margin, or you would like to give an indication that the EBITDA margin may come under the pressure?
Thank you, ma'am. Realistically, if I continue to use coal as my fuel, my EBITDA margin would have been definitely under pressure. Since we changed to use the type of fuel which is less expensive compared to coal, I'm hoping to continue with the same EBITDA margins this year too.
Okay, sir. And this EBIT for the cement manufacturer is also increased from 7.67 crores to 24.19 crore in this year. So this you would classify, this you would say as the volume and the price pay?
Significantly because of volumes. Price realization compared in this quarter or compared to previous year was not very significant. But volumes did contribute to the jump. So one more thing, what happened in my particular case was in our cement industry, every cement plant generally has a very high component of variable cost. In my, the variable cost component is a little lesser because my power I am self-generating. So to me, an increase in the capacity will add a huge contribution margin compared to a regular cement plant where they have nearly 70% of the cost coming from the variable component. So any increase in my volumes will have a significant impact on the margins, like what we have noticed here.
Okay. And as with our company sells the cement in the close vicinity of the Karnataka and the South Maharashtra, I believe the rising crude prices are not affected our freight prices also.
Come again. I lost in the last sentence.
No, what I'm saying is, as our cement is sold in the close vicinity of Karnataka and the South Maharashtra, I believe the rise in the crude prices is not affecting our freight cost, because that is another important cost factor as per the cement production.
I would not say significantly, yes. So what our strategy has been very, very focused last 1 year. We are trying to cut down the average distance from the plant to the consumer, and it has been being successful. So as we keep going, investing in the marketing and the sales activities, we are trying to cut down on the distance and what we should be able to sell. So luckily, what you say is true. So as we come close to our plant, the impact of the crude oil will be less compared to many major plants. In fact, the plant where we are located, almost 80% of our cement is sold in the vicinity. In the same target market, a major plant has to come from over 250 kilometers, whereas we go not beyond 50 to 100 kilometers. So yes, this thing is right. The crude price will have a minimal effect compared to a lot of other major plants.
Okay, thank you, sir. And what was our cement realization for the year? The past by, either year past by, that is FY22?
Yes. Our net cement for Q4 is around about 3,995, which is around 4,000. For the entire year, it was about 3,925. It is little bump, about 100 rupees over the previous year. Average realization, I wouldn't say we added significantly, but only because of volumes, like you rightly said, there was a good contribution.
Sir, I missed the figure for the year. 3,900 and?
For the year, it is 3,991.
3,991. So the quarter 4, we have seen little reduction.
Quarter 4, it was 3,925, because quarter 1 and quarter 3 gave a good pricing to us.
Okay, 3,925. Okay, I missed on the number. Okay.
Yes.
And what I wanted to ask you is, who was our major contribution in the area of our presence, in the area of our market presence?
Who would contribute to our consumption?
No. Who are our competitors?
Our competitors, right? Yeah. In our sector, we see mainly JK Cement and I would say like Dalmia Cement. I also, apart from, of course, tier 1 brands like ACC and Ultratech, we have like Orient Cement and a little bit about Penna Cement. Significantly only JK Cement, I would say. JK and Dalmia are the major people whom we have to fight against.
Okay. Sir, and I just wanted to ask some more question on the financials. Like what was our, I have seen there's a drastic fall in our depreciation and amortization cost as far as the Q is concerned. That is on the Q4 over the Q3. So any specific reason for the same?
Yes, some of the investment blocks what we had done earlier, they got completely depreciated. So which is why you see on average this year the depreciation amortization is much lesser.
Okay, so which is likely to go on the same level or little increase if you consider the FY decrease?
Maybe a little increase because the new solar plant is added. The completion of entire plant was completed in the first week of April. So that depreciation that will happen in this financial year, FY23.
Sir, and what will be our working capital cycle?
About 150 days.
Is that high?
Yeah, it is fairly high because, like I said, we typically make sure we have a huge stock of raw material. Being a small plant, we make sure the fuel is taken from. We have to buy out a lot of all the raw materials. We do not have our existing own mining, which is why we have huge inventory.
And what is our receivable in days?
Receivable in days about 14 days, I believe.
Sorry?
The average receivable is 14 days and average payable is about 9 days.
Okay. Okay. And sir, as we are talking about the solar plant and we are selling it and we are seeing the main major incentives coming up, is the profit is comparatively high as we compare with our traditional businesses, you know? And do you plan to invest more in the solar plant so that we can sell more power as that is the need of a time?
I mean, at this point in time, we are focusing on increasing the capacity of the cement. Your primary focus. Solar, yes, we are already, as we finish off with the expansion of cement plant, we might look at solar again. But when we set up the solar plant, the incentives from the government was abundant, very attractive. So it has been scaled down now. But yes, we will continue to grow in both the directions. But right now, cement expansion looks very lucrative.
Okay, sir. And this year has been the landmark year by crossing 100 crore revenue. What are your plans for the next year?
Well, I mean, to begin with, cement capex is one thing which is, rattling in the mind. And once that investment is done, we would expect top line to go by almost 2 times or more than that. Apart from that, I would say, continue to work with the modernization of plant, pare down the cost, reduce our fuel consumption, reduce our electricity consumption per unit. So these are the basic things which we will continue to pursue.
And going forward, our plan would be again to focus on the close vicinity of Karnataka, Maharashtra, or you look forward expanding your market reach?
Absolutely, madam. Because what has happened is only 4 to 5 districts which are supposed to be close enough. The consumption is over 2.5 to 3 lakh tons per year. So if we focus hard on that, I would say more than that. 4 to 5 districts will be about 5 lakh tons per year consumption, and we are barely at 2.5 lakhs. There is going to be a significant, penetration in the local markets.
Okay. Thank you very much, sir. I wish you all the best for your future.
Thanks a lot.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Sachin Shetty, individual investor. Please go ahead.
Thanks for the opportunity, sir. So I have 3 questions. One is the current capacity or current limestone capacity, or what are the results available with us? That is one there, sir. And for this CapEx, have you taken any EC approval for environmental clearance approval for the CapEx? If no, then what is the procedure? How long it will take? That's all, sir.
The first question I couldn't get you. Limestone reserve is what you asked me?
Yeah, how much is the current limit limestone capacity? How much resource is available to us in terms of million or what? How much is the limestone? Yeah.
So limestone, we are buying the limestone from about 14 to 15 vendors outside. In 2007, we secured a 305 acres mining lease from the government of Karnataka, but we had some surface right issues with the government of Karnataka, which the matter is in Supreme Court as of now. But we are the only cement plant in that region who buy limestone. And because of that, if you combine all of them, for example, a 300-acre land would have about 70 to 80 million tons of limestone, good enough for a 1 million ton capacity for next 50 to 60 years. And that with just depth of 50 feet. With the new technology, what we are seeing, people are going with a depth of 100 to 150 feet. So yes, the limestone reserves from where we source are more than 200 million tons. And the second question, I guess you asked.
Yeah, in this limestone, sir, we don't have our own mining, right? We are buying from other vendor, right?
Correct.
And what about the price, sir? It is fluctuating?
No, not at all. Limestone price is not at all fluctuating, since we are the only buyer here right now. So all the
what is our understanding with them, sir? What is our understanding with them? So have we done any contract with them, that vendor, or what exactly, sir?
No, we do not have direct contracts. Typically, being a small plant, we give them purchase order for the entire year's consumption. And since it is owned by them, we get to dictate what part of limestone we need and what part we do not. So that helps us in keeping the quality of the raw material on the highest level. Yes, we have a single 1 year consumption requirement. We give to them, and based on that, we procure the limestone.
Okay, sir. I mean, in that area, many cement companies are there, like JK Cement, JK Lakshmi, Dalmia. So all means that much of resources enough for all the cement companies, right? No?
Plenty.
Okay.
Just about 300 acres, like I said, 50 feet depth will supply to 1 million ton plant capacity for 50 years. And now they can go up to 250 years of depth. So it is plenty. Limestone availability is plenty. In fact, to a large extent, the price of limestone has not even kept up with the inflation for us.
Okay. So second question was that EC approval, environmental. So we are going for the CapEx. Have you required any EC approval for this, or what exactly? Already we have taken the EC approval, environmental for CapEx expansion.
So we have already taken the EC approval for up to 1,800 tons of clinkerization, even though at this point in time we are not looking at it. But right now what we are adding is the slag grinding capacity. Slag grinding capacity does not require any EC clearance because it is pro-green, which means that the slag which comes in the steel plant, we are consuming it here. So it does not require EC at all. In fact, Pollution Control Board encourages us to utilize slag as much as possible.
And sir, this 1,800 ton clinker means right now current capacity how much is, right? We have taken EC up to 1,800. Means current capacity how much is the clinker?
800 per day.
800 means approximate 1.5 times we have already taken. So no need to go for the EC approval for this expansion.
Correct.
Okay, sir. Thank you very much.
Sure, sir.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Ajay Agarwal from Funds Guide India. Please go ahead.
Hello, this is Ajay Agarwal.
Yes.
Nice talking to Mr. Venkatesh. My issue was, I just wanted to understand, have a little clearer picture. I think your EBITDA margins on the power sales are pretty higher compared to the cement.
Correct.
So out of your 113 crore sales in the total year, 15 crore are coming from the power.
Correct.
So if you can, over a period of time, just explain to us, how the two businesses have the different operating margins as well as capex requirement, then we could get a clear picture of how the direction of the next few years are going to be on both fronts, and where we get the better type of, because 15 crore in power sales EBITDA would be more or less what, 15 crore itself.
No, part of the power is utilized in house.
Okay. No, but that is sale of 15 crore you're showing.
Yeah, only of 15 crores. Otherwise, we are producing power worth almost 35 crores.
Exactly. So your sale is 35, which is fully outside, right?
No. Since we are since about like we said about 50% or so we are utilizing it in house. We would be able to record only 50% of the sales over there.
Right. So we have been able to sell 15 crore outside, or what is that figure?
Correct. 15 crores is what we have sold after consuming in house. The balance part what we have sold outside.
So on that 15 crore, EBITDA would be fully 15 crore.
Almost, you're right. Maybe 14 crores because O&M cost is not very significant in power.
So your EBITDA of 35, which is there totally, 15 is from power and 20 is from cement.
Correct. I would say an approximation. I would not say accurate. I haven't looked at the figures. Roughly in that direction.
I mean, just broadly. Similarly, when you're saying you have just added your own internal capacity, that means the 25 megawatt next year will be totally selling outside.
Yes.
So based on the 6.5 so the 25 megawatt would be able to generate what type of units of power?
Typically about 3.7 crore units per year is what we generate in there. And even expecting about 6.5 rupees, the math is around 3.7 into 6.5. If we get the best price around 22 to 24 crores is what we should realistically expect.
Oh, so from 15 crore this year, we could have a sale of about 20 to 25 crores.
Yes, because our 12 megawatt generation started in Q4 itself. So this year, the entire power will be capitally consumed, which means that the first plant will have excess capacity.
Okay. So that's what I'm saying. So from 15 crore this year itself, you will have an EBITDA of about 22 to 25 crore from the power itself.
Yes.
And then you're talking of doubling the capacity of cement. So that will be another stream of income and revenues.
Absolutely. But doubling will not show up in this year. By the time we set up.
But that's the broad line now. Basically, you become strong EBITDA on the power which you have already done the capex.
Yes.
So that benefits will come from this year onwards.
Absolutely.
Okay. So maybe in the next few, if you could tell us the division of the two businesses of the sale and the EBITDA, it will enable us to understand it better. That would all. And it's nice that you have done such a large capex, which will give us the benefits now.
Absolutely, sir. Absolutely. And we will continue to look at cement plant also, which was in a smaller capacity. Once we start heading towards doubling the capacity, the contribution margin generally starts to go up. And what we are adding is not the main equipment of the cement plant. It's a grassroots integrated plant. Like we have a crusher, the raw mill, the kiln. Nothing of that. Only one, we are adding one grinding capacity for slag, which directly impacts on our revenue. So
that
most of the
grinding capacity will be the grinding capacity will be quite a small percentage compared to setting up a new plant.
No. It will be huge. Almost like the grinding capacity will be equivalent to what we have current capacity.
No. What I'm trying to say is that the capex cost, if we were to do for setting up a full plant, like hypothetically 3 lakh unit you are producing at the moment, and if you were to double the capacity to another 3 lakh, so if you were to take a million ton type of a capacity for setting up a new plant, that would be worth about 500-600 crores. That's what the whole thing is, right? For setting up.
Yes.
If you were to set up a new 1 million ton plant, the capacity cost is high. For grinding, it will be only 20% of the new plant, right?
Absolutely. You are absolutely right. Correct. That's the direction only we are going.
That's what I so you require quite a small capex capacity compared to setting up a new plant.
Absolutely. It is going to be it's very minuscule, like you said, rightly said, maybe 20% or lesser than that. With that, we'll be reaching to what we're looking at.
Oh, very good. So I think you've got so you could soon become a million ton player in another some 2-3 years time.
Yes, we are looking forward. That's the direction we are going. Definitely, yes.
Okay. Good. So let's see how you progress, and best of luck. Thank you.
Thank you.
Thank you. Participants, if you have any questions, please enter star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Vasubal Shah for closing comments.
Thank you everyone for joining the conference call of Shri Keshav Cements and Infra Limited. If you have any queries, you can write us at praktipal@kirinadvisors.com. And once more, many thanks to management team and the participants for joining the call. Thank you.
Thank you all.
Thank you all.
Thank you very much. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.